Virgin Money has decided to join the bandwagon and ban customers from crypto credit card purchases. The list seems to be ever growing. Banks include now Lloyds Bank, Discovery, JP Morgan, Capital One, Bank of America, Citigroup, and now we have Virgin Money. Virgin Money, a financial service company present in Australia, South Africa, and United Kingdom, has followed several US and British banks by banning credit card purchases of cryptocurrencies. A spokesperson for Virgin Money told BBC that, following a review of our policies, I can confirm customers will no longer be able to use their Virgin Money credit card to purchase cryptocurrencies. Lloyds Banking Group announced their credit card crypto ban on February 5th, after JP Morgan Chase, Bank of America, and Citigroup had all banned their customers on February 3rd from purchasing digital currency with credit cards. Customers at the bank can still purchase cryptocurrency with their debit cards. When asked about a future credit card crypto ban at Barclays, a spokesman for the bank told BBC that customers can currently use both credit and debit cards for cryptocurrency purchases. We take precautions to assess affordability before extending credit, flag and prevent any suspicious transaction, and also closer monitoring for credit risks. The string of credit card bans by large financial institutions comes after the crypto markets have experienced heavy losses this week, with Bitcoin dropping below 7,000 for the first time since December. The traditional market saw a similar slump yesterday, with the Dow Jones Industrial Average down over 1,100 points and the SP 500 Index losing its January gain. Bitcoin is hovering around $7,000 by press time, down about 4.14% over the last 24-hour period. Well, we can now say that Bitcoin is actually hovering around $7,600, up approximately 10% in the last 24 hours, and the rest of the cryptocurrency market seems to have followed. Great news. Now, let's be honest with each other, when it comes to this credit card ban. And I'm not a financial advisor, so I'm not telling anyone what should do, but do they really are doing this so they can prevent customers of losing their money, because of cryptocurrency losing its value? I mean, credit cards offer, as far as I'm aware, balance transfers. So therefore, you can easily balance transfer, if it's offered to you, of course, your money from your credit card to your debit card, still buy whatever you want, including cryptocurrency. And in a sense, you've just used your credit card. It wasn't directly, but it's the money that came out of the credit card. Of course, you can also, some suggest maybe you can just go to the cash machine, withdraw money out of your credit card, which is not advisable. Usually it consists, this comes with high interest fees, and maybe that's what they're trying to do, not looking after customers so much, but trying to force customers, if they do want to use their credit card money, to have to go balance transfer, cash machines, and pay a lot more interest than if they were to use them directly. Although usually when you do use a credit card, in some cases, okay, I wouldn't say usually, because I haven't used credit card to purchase cryptocurrency myself personally, these transactions tend to go as cash transactions rather than a credit card transactions. So I'm not quite sure what exactly is happening. To be honest with you, as of lately, well, as of the last few days, I've been thinking in regards to this, and I'm coming to the conclusion that maybe banks are only doing this because the prices of cryptocurrency was down so much, so they knew if they are allowing customers to obviously use their credit cards, pretty much they're going to allow customers to buy in the dip, and that's something, of course, they don't want to see. I guess they don't want to see us buying cryptocurrency at the dip, simply because it's the best time to buy. Again, I'm not a financial advisor, I'm just giving you my opinion and obviously sharing this story with you, that it looks like the list is growing. Barclays banks, they've put it very rightly so. They are monitoring, just like any banks, the customers' activity. Can customers afford to pay their credit cards, and so on and so on. So you can't just get a credit card and all of a sudden have a credit limit of $50,000 and if you spend them all, you're gonna then have problems paying them back. Normally you start small, depending on your financial credits and whatnot, and then you grow. So I just don't buy this. I'm sure there's other agendas to this. It's nothing to do with looking after the customers, because why are they not coming out with bans to customers using their credit cards to gamble? I mean, it's worse than cryptocurrency in my opinion. I don't see too many people making money out of gambling, to be honest with you. I mean, Vegas wasn't built on people winning. So there you have it, guys. The list is growing on, but I gotta remember one other guy, Dave Ramsey, that I like to watch, although I don't always agree with him. He does say don't use credit cards, cut them in half. So maybe that is the right thing we should do. Cut the credit cards in half, don't use them, and let's see what the credit cards will then do if we start banning credit cards and abandon them. Pretty much just say, well, if we can't use them for what we'd like to use them, then you can have them back in half. That's it from me, guys. I hope you enjoyed this video. Let me know what you think in regards to these bans, and who knows, maybe in a weeks, in months, the bank's gonna, just like governments, decide to come back and pedal back pretty much on their decisions and say, we've did a little bit of obviously reviews and so on, and decided we should allow customers to buy obviously cryptocurrency with credit cards if they choose to do so. That's it from me. If you enjoyed the channel, feel free to subscribe and share. The link will be down below to this article. Come follow me on Twitter, and I'll see you in the next video. Bye for now.